on Bloomberg Quint.
All right, welcome back. You're watching IndianOpen. Asian markets, they're faring pretty okay for themselves this morning. You've got the rest of Asia doing almost 1%. On Japan, you've got Hang Seng up about closer to 1%, and even Shanghai not doing all that badly. SGX Nifty for one is absolutely flat.
Yeah, it's interesting that, I don't know if it's a factor of we having done well for the last 2 days and now Asia starting to participate, because the US markets were very flat too. It's just that the rest of the Asian screen is looking very robust.
Yeah. FI activity picking up, but marginally.
Yesterday was very muted. I was a bit surprised, because with the mid-caps doing so well, one would have thought that maybe the institutional activity could have been a bit heightened, but very, very flat activity.
And it was actually strength right from the beginning. We maintained the gains, saw a little bit of a spurt in the upside, and the close somewhere closer to those decent enough levels of more than 11,800. But today's activity is going to be closely watched. The last half an hour particularly is going to be of interest. But getting in, Parthiv Shah, director at TRACOM Stockbrokers, is joining us on the show right now to take us through what he's going to be watching out in terms of individual stocks. Yesterday's session, we saw the open offer for Mindtree and the tendering in that took place. You've got almost from 31% that L&T wants to garner via this open offer. They've already accumulated, I think, about 30.5%. Parthiv, what does one do with Mindtree? Another piece of news is that Rostov Ravanan would be stepping down. What would you do with the Mindtree?
Good morning, Devina. See, Devina, I think with all due respect and with all full credit of Mindtree founders, I think they've created a great entity. And I think here we have a giant like L&T, who has had a fantastic track record of building in IT services and IT engineering business. And both the companies we know for the fact are listed. And I think with L&T's aggression will certainly go a long way for Mindtree shareholders to create further value. So I think despite all the tussle that we saw between the founders of Mindtree vis-a-vis them not wanting to have an entity like L&T kind of take over and hostile bid and all that, I think I would have always wished that both could have worked in synergy or in tandem, but always that's not the case. But nonetheless, I think it's just because it's an entity like L&T, which already has this pedigree and great track record and great relationships with customers world over, I think they can really synergize this business. And we are liking the fact that an entity like L&T is able to garner higher shareholding, which is always a good thing. And eventually, I believe that eventually the roadmap after this acquisition and after trying to synergize should be in terms of Mindtree getting merged with one of the listed entities, and most probably it's likely going to be like L&T Infotech. So I think for Mindtree shareholders, probably it's not a bad idea to stay put. No two ways about it. The current valuations are certainly elevated, and they are just elevated because of the L&T offer. A fair value of Mindtree at current juncture in comparison with a lot of its peers and in terms of its current growth rate should be somewhere around 800, 850 per share. But the premium is just because of the L&T's higher purchase price and the exit that we are seeing from the current promoters and also the open offer. But nonetheless, I think for long-term investors, this is not a bad thing. The company is going in very, very strong hands. So certainly stay put over the longer horizon.
Okay, that's on Mindtree. What about the rest of IT, and particularly some of the larger names as well? All right, I think there's a bit of news that we need to address.
Yeah, just before we get on to the other IT companies, maybe banking is important to SBI. Will consider additional capital raising on July 1st. To give us more details, Mr. Prashant Kumar, Deputy Managing Director and CFO at SBI, joins us right now on the phone line. Mr. Kumar, thanks so much for joining in. I presume the nature of this fundraising, Tier 1 capital in order to meet certain requirements. Can you give us some details about this?
Well, actually not. This is additional Tier 1, okay, which is not a CET. So additional Tier 1, we can raise up to 1.5% of our risk-weighted asset. So at present, we are less than 1%. So we are just meeting this gap, and we are approaching our board to consider raising additional Tier 1 to the extent of 7,000 crores.
Okay. That aside, Mr. Kumar, I presume that because this whole talk of recapitalization is so high, I believe SBI on its own has probably made a statement that they do not necessarily require any additional capital from the government for its growth path.
Yeah, exactly. And even we are very well capitalized. Even there is no need for us to raise any capital from the market also. And our internal accruals would take care of our 12% credit growth.
Okay, just one small question. So one thankfully clarification helps. One full question, Mr. Kumar. How is disbursements and growth looking per se? I do not want exact details of what the quarter has been like, but then can you throw some color, because there's a lot of question mark about how growth is, how consumer growth is shaping up, etc. You'll be best placed to give us some color about it.
So industry is growing around 12%, and we are in line with the industry growth. And we are seeing a very good traction on the retail side. Corporate, yes, is a little issue about the corporate growth, especially on the private sector side. But on retail, we are seeing a very good traction.
Okay, we'll leave it at that, Mr. Kumar. Thank you so much for taking the time out and being with us and giving us that perspective. Well, small capital raise, approached the board for additional Tier 1 capital. 7,000 odd crores is the proposal they're going to make to the board. Nothing too dramatic about it, but an important development nevertheless. State Bank of India, the stock has been very well and doing very well in the last few days. Parthiv, can you just comment on that before we resume our conversation? State Bank of India, you heard this was routine, nothing too dramatic about it, but they have said that they do not require additional capital for managing their growth prospects, and the stock has done remarkably well in the recent past.
Certainly, Neeraj, and I think there's a lot of appetite for additional Tier 1 bonds for likes of SBI. We know that this is also raised in forms of perpetual debt, and these perpetual bonds are priced quite reasonably, and there's a lot of appetite from a lot of institutes. So I think it should easily sail through, and I think this is always a good sign. And we are seeing some sort of appetite for many of these largest size PSU banks, which are wanting to come back into the lending system very, very aggressively, and for which they are going to raise funds. And likes of Bank of Baroda and SBI, even if they have to dilute certain equity, they are at a relative comfortable position to kind of raise a lot of funds for further growth. So I think these are good signs ahead, especially from the PSU giants, which are in a relative comfortable position with the provisioning coverage ratio also going up.
Okay. That is on SBI for one. The other one, Parthiv, is Britannia. That was the top loser in yesterday's session. The company put to rest rumors, that you would have the management stepping down, Mr. Berry, and that was addressed. But the stock, since it's moved into the index, has really not done a whole lot much. Do you see this being slightly more of a sluggish tale for Britannia for the foreseeable future, or do you see a pickup for the stock compared to the rest of the pocket that is also trading with some amount of weakness?
See, even I think just putting aside the rumor mongering, which had some sort of volatility in the stock price, it's a great company, no two ways about it. They are launching a lot of new products, and we know for the fact that whenever these new products are launched, it's not always necessary that all of them are going to be successful. There is some sort of upfront cost for these products. There is some sort of advertisement cost, and probably market is slightly wary on it. And I think what we know for the fact is that even at current levels of around 2,700, 2,750, I think this is an extremely expensive, if I were to put an FMCG stock. No doubt, I think it's more into the food segment, but yet I think it's a very, very pricey stock. And probably what the market wants to now wait out on is that let's see how the next 2 to 3 quarters pan out. How the inflationary pressures and things like maybe say wheat, sugar, which are one of the key ingredients. Milk has been very stable for their dairy related business. But nonetheless, I think markets would want to look at what sort of ad spends they do for the new product launches, which impacts the margins, and whether the volume growth that we have seen, there has been some sort of tepidness in most of the FMCG players. How does that pan out next 2 to 3 quarters? And more importantly, the monsoon, which always has some sort of indirect demand for these companies. So I think with elevated valuations, the street is kind of going in a little wary. But at the best, I think this stock has corrected a lot from its peak. So we are not expecting a too bigger dive down, but more importantly, it will be like a time correcting event until I think things look better in terms of the volume growth and the margin expansion.
All right, lots more to talk to you, Parthiv, about many more stocks. But let's go across to our research team in the meantime to talk about a few stocks in news and how that would impact them as they open up for trade, and some brokerage calls as usual that have come about in yesterday's session. Mishika, let's start off with you first with regards to some stocks in news.
Yes, the first stock that we're looking at is Suntech Realty. They plan to create a large portfolio with an investment of over 5,000 crore rupees in commercial and retail properties over the next 4 years. Then we have a downgrade for Reliance Infra. Care Ratings downgraded the ratings on the long-term facilities and short-term facilities to D from B and A4. NCD's ratings have been moved to C from B. Now, this revision takes into account the ongoing delays in debt servicing. Also, the revision in long-term ratings assigned to the NCD's issues factor in the deterioration in the credit risk profile. Airtel Africa, a unit of India's Bharti Airtel, is to price London's listing at bottom of the range. They're going to issue shares at 80 pence per share, and this issue is already oversubscribed. Then we have Welspun India. They've entered into a joint venture with Germany's Sense Organics and has 51% stake in its Myanmar arm. It will be investing up to $140,000 US during the year 2019, and as a part of the company's sustainable sourcing strategy. Then we have news on this IPO. IndiaMart Intermesh IPO subscribed 36.2 times on the final day. Lastly, let's look at the important bulk deal. True North Fund sold 3.74 crores, which is 7.4% of Aster DM Healthcare at 120 rupees each. The buyers in this deal were Ontario Pension, HDFC Mutual Fund, Fidelity, Steenberg India, and Tata AIA Life Insurance.
All right, Mishka, thanks very much for that. Sameet, what about the brokerage calls?
Well, couple of them. The first one is on Colgate Colgate, where Deutsche Bank Research has maintained its buy rating on the stock, but they have cut down the target price to 1,400 from 1,500. So Colgate has sent out this business update to analysts. So Deutsche Bank has come out with this notes, and the key highlights from that business updates include firstly, they include that the toothpaste category growth has further moderated in the fourth quarter after the fourth quarter of financial year 2019, and currently it is close to sub 5% level. Along with that, if you remember, in the past couple of quarters, the rural growth and the urban growth was at par for Colgate, but so far in the first quarter, the rural growth has fallen below the urban growth. That's what the business update said, according to Deutsche Bank. However, the market share for Colgate has remained stable at around 52%. Lastly, on margins, the company is saying that the margins could remain under pressure due to higher promotion cost, but some of the cost efficiencies will provide support when it comes to the margins for the first quarter of financial year 2020. Second note we have is on Indian Telecom, where Morgan Stanley has resumed coverage both on Airtel and Bharti Infratel. Now, according to the brokerage, the industry structure has improved with only 3 operators now, and there has not been any aggressive tariff war over the past 1 year, which is a relief according to the brokerage. Now, for Airtel, they are saying that some stability has been seen in the India wireless business, and they're seeing early signs of revenue recovery when it comes to Airtel's India business. Now, for Infratel, they're saying that the large tenancy deletions are currently done, and they're expecting some stability to come in going forward. However, they say that a tariff increase will be the key catalyst for the industry because of the debt that the industry currently has. Now, for Airtel, they have resumed the equal weight rating with a target price of 360, and for Infratel, they have resumed their overweight rating with a target price of 323.
Right, guys, thanks very much for that. So that's a quick wrap out of the stocks you need to keep an eye out on. Parthiv, in fact, picking up from Telecom, FY20, that this was the year that was touted as the year that you'll see a turnaround for Telecom as an industry. Now that there has been consolidation in this space, Bharti Airtel, for one, they're taking measures to make sure that they bring down their debt as well. Now, the listing in the Africa business, IPO in the Africa business rather. Would you be in favor of starting to invest in Telecom, and then what would your pick be?
See, certainly, I think in telecom, we have 3 ways to play. One is Bharti Airtel, one is Vodafone Idea, and third is Reliance Jio. But Reliance Jio is currently an integrated entity of Reliance Industries. So I think there are too many moving parts there. But I think the best pick is no two ways about it at current juncture, Bharti Airtel. I think what they are doing is a very, very smart thing. They are really focusing on trying to strengthen their balance sheet. They know for the fact that going ahead, I think there is going to be an increase in the ARPUs, because we know that Reliance Jio currently is operating here with return of capital employed of not more than 4 to 5%. So they will also need to kind of increase their pricing power, which will eventually lead to an entire industry-wide. We've been predicting it to happen in sometime in 2020, but I think whenever that happens, that's going to be a huge trigger in the way for these incumbent telecom carriers like Bharti Airtel, which have been more successful as compared to likes of Vodafone Idea in terms of retaining their subscribers and not having a lot of subscriber attrition loss. Of balance sheet, there will certainly be visibility in terms of investment into new age fifth generation technologies, which will also need to they will also need to spend on the spectrum and the equipments and all. So I think this is a good thing that they're doing, strengthening their balance sheet with deleveraging, and going ahead, the outlook certainly from here, being in a very lagging sector over the last 10 years, I think Bharti Airtel should be one of the best picks.
Okay, watch out for Bharti Airtel. Morgan Stanley's the note that they've initiated, of course, mentions Infratel as the other idea too, not strictly telecom, but telecom related. And there they believe that the negatives are already in the price. Let's wait and watch if indeed that does play out in the session today. Okay, let's focus a bit on the charts as well before we get back to Parthiv. Sameet Chavan, Chief Analyst for Technicals and Derivatives at Angel Broking, joins us on a very important day, I must add, as does Aditya Agarwala, Technical Research Analyst at Yes Securities. Gentlemen, both of you, good morning. Thank you so much for taking the time out. Sameet, I want to start off with you. What's your sense of how the expiry day could shape up today? We've got some strength behind us in the last couple of days.
Morning, Aditya. Yes, after recent consolidation, we managed to hold on our important support level of 11,600, 11,640, which coincided with the massive upward gap area that was created post the exit poll numbers. And since last 3-4 days, we have been witnessing buying emerging from those important levels. So there were key patterns also that were formed on hourly charts, bullish wolf wave pattern that was observed around 11,640, 11,650, and that was the key potential reversal zone according to that pattern. Fortunately for us, yes, we rebounded sharply, and yesterday we managed to surpass our major hurdle of 11,800 on a closing basis as well. And importantly, it was a broad-based short covering move that was witnessed in last couple of days. Bank Nifty, it has been showing some strength. Some of the marquee names, HDFC Bank, which gave a decisive breakout from its recent consolidation, so that augurs well for our market. As far as today's expiry is concerned, clearly 11,800 put writers have been quite active during yesterday's session. In fact, toward the fag end of the day, we saw some kind of writing in 11,850 put as well. So we expect this expiry to pan out beyond 11,850. In fact, we will not be surprised to see it happening beyond 11,900. So as far as bias goes, our bias remains positive. Any minor dip would be a good buying opportunity. For the day, 11,785 should be your stop loss level, and we would expect this rally getting extended first towards 11,920, 11,960.
Aditya, what about you? How are you approaching trade today?
So definitely there's bullishness that we'd seen in trade yesterday and the day before yesterday. So we had back-to-back 2 days of good up move we'd witnessed on the indices. It's broken out from an 8-day consolidation index. So I also believe that markets are headed higher. Above 11,860, 850, I believe markets can test levels of 11,920 and 960 on the upside. 11,800 for the day will act as a very important support zone, as Sameet also pointed out. There's good put writing happening at 11,800. So I believe 11,800 will act as a very important support, and I wouldn't be surprised if actually index surpasses 11,900 and closes beyond that in trade today. There is good momentum buying which we'd seen in dying ends of the trade session yesterday, which is likely to continue in trade today as well.
Okay. You've got a few stock ideas as well, L&T for one, and then Adani Enterprises is what you're liking.
Yes, we've seen good momentum buying, which was witnessed in HDFC Bank in trade yesterday, and L&T too is showing some strength at the moment. It's come off beautifully from lows of 1500, 1520. If it breaks out of that trendline resistance, which is somewhere around 1565 to about 1560, I believe it will make new highs for itself. So I'm going in for a long trade out here above 1156. I believe L&T is a buy for targets of about 1100, 640, putting a stop loss at 1490. Second buy call is Adani Enterprises. It's on the verge of a breakout from a flag pattern, bullish flag pattern. Following a good up move, stock has entered into a narrow consolidation zone. Volumes have also declined. So that tells me that there's good consolidation happening in the stock post a sharp up move from levels of 117, 118. So I'll be buy here. Targets out here will be 170, stop loss 144.
Okay. Two stocks there from Aditya. What about you, Sameet?
See, even I have a couple of buy ideas. First one from the metal space, which has been clearly bucking the trend since last couple of days. And yesterday we saw a massive surge in most of the metal counters, toward the fag end of the day. So Tata Steel is the one stock that we have been liking from this space since last couple of months. We have been contra buyers in this entire consolidation phase. So around 470, 474, we have been contra buyers, and due to yesterday's massive bump up, finally we saw a breakout happening from a major resistance zone of 500, 505 on a closing basis. So if you look at the metal index also, it has managed to give a decisive breakout from its recent consolidation phase. So all in all, we expect decent move in most of the metal counters. So at this juncture, risk to reward wise, Tata Steel certainly looks good. Our next target would be somewhere around 530, 532. Momentum traders can go long with a stop loss of 496. Apart from this, most of the auto ancillary space had seen some kind of relief move in last couple of days. So Bharat Forge is the one stock that was hovering around its major multi-year support lows. Yesterday we saw a decisive breakout, price and volume breakout in this particular counter. So going ahead, we expect a decent move in Bharat Forge as well. So target would be around 469. Stop loss can be placed around 438.
Okay. Well, let's move on to our special segment, Bloomberg Edge, wherein Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, morning. What's the stock on your radar today?
Morning, Neeraj. So we're looking at Infosys on the daily charts, and there's a sell signal coming in on the back of the MACD indicator. But like we always do, let's first try and understand what the MACD is and how do you interpret it. The MACD is basically a trend following indicator, and it shows you the relationship between the two moving averages of the price. How do you interpret it? You go long when the MACD line crosses above the signal line from below, and you go short when the MACD line crosses below the signal line from above, which is the case when it comes to Infosys. In the lower panel, as you could see, the blue line, that is the MACD line, and that has given a negative crossover. So it's crossed below the white line, which is the signal line from top, to create that negative crossover which I was talking about. If you take a look at the price chart, what we've seen historically is that every time the stock comes close to 750, 760, it gives up those levels and it starts correcting at 750, 760, being a strong resistance mark for the counter. We waited this time around, maybe it would cross that mark, but again in 3 out of the last 4 trading sessions the stock has corrected, and in fact in yesterday's day of trade it came off considerably and is down close to about 2% at 739. From here on too, it looks like with the weakness in the momentum and the MACD indicating a negative crossover, we could watch out for a bigger move on the downside from here on.
Okay, and how well has this worked in the past for Infosys, Yash?
So Neeraj, 7 out of the last 10 times that the MACD indicator has given a negative crossover, the stock on an average over the next 1 month period has fallen close to 5.5%. So from here on, one could look at targets of close to about 700 on the lower side.
All right, Yash, thanks very much for that. That is Infosys, which is in focus. 799 odd is where the stock is at. Aditya, what would you do with Infosys?
So there is a consolidation that's going on at the moment. 760 on the upside is a resistance, 730 on the downside is a support zone. So it's more of a sideways consolidation that's happening in Infosys. And that is the case with most of the IT stocks. They are underperforming. Tech Mahindra is also weak, showing some signs of weakness. I won't go short at the moment. Below 730, probably yes, there'll be more weakness in the stock. Till the time it breaks 730 on the downside, I'll stay away from the trade. I'll not take any trade, in fact, in Infosys at the moment.
Parthiv, to the rest of the IT pocket, now that the last few quarters have seen employee expenses surge, and now you've got the latest news with regards to how it could be further detrimental with regards to US hirings. Do you see this as an opportunity to probably exit some of the stocks that you would have in your portfolio?
See, David, it all depends. Many of the large cap IT names, say names like HCL Technologies, Infosys and TCS, no two ways about it. Even they have been facing the brunt of elevated visa cost and higher wages. And we've seen the attrition levels haven't been very low for even some of these big names. So they have to continuously give more and more incentives. But I think the good thing about these larger players is their share of revenue in the new age digital segment is continuously going up. And we know for the fact that this 25 to 35% revenue that they're garnering from this digital IT segment does bring in a lot better margins. So I think it will be very, very key for these players to gradually up this game and increase the share of the digital revenue. And whenever they have deal pipelines renewed, I think that renewal should take place in this particular technology set, where I think the large cap IT companies will be far more capable because they have the strong balance sheet to invest more and more, even if there need be an inorganic acquisition would make sense. So I think I'm not suggesting that one should take the money and exit these counters right now. They are not prohibitively expensive in their long-term valuation chart. So I think stay put. Next 2 to 3 years could be really good for these companies because a lot of IT deal pipeline is up for renewal, and as long as US and European economy is relatively stable, I think these companies should be able to garner more market share in the deal pipeline renewal.
Well, today I'm watching out for 3 or 4 names. One of them is Suntech Realty. Simply, we spoke about it in stocks in news, but the large commercial and retail portfolio for 5,000 crores over the next 4 years. It's interesting to see what some of these prominent, well-capitalized developers are saying. So watch out for Suntech, yes. Watch out also for the Godrej group companies because of those family split news that have been doing the rounds in media. I think those stocks could come under a bit of focus. Godrej Properties has done largely well, but after hitting highs day before yesterday on the back of those QIP news, yesterday corrected about 2.5%. So do watch out for some of these real estate developers. Parthiv, very narrow universe. What's your favorite?
See, a long-time favorite has certainly been Godrej Properties, but Neeraj, I absolutely concur with your view. Now probably would not be a bad idea to take your money. It's done really well in a very, very lagging sector. And generally, whenever there are any sort of promoter-related disputes, and especially in a business like real estate, sentimentally it might have an impact. So I think at this juncture, Godrej Properties, I would not suggest a new buy. Rather, somebody holding it can book out. But a very, very controversial stock that I would like to recommend is DLF. It has its risk associated, but the good thing is that this is a company which has reduced the debt burden from 25,000 crores to current levels of 5,000 crores. It still has very, very good assets, and even if I were to highly discount these assets, it's still valued at around 65,000, 70,000 crore, and the current market cap is quoting at around 40,000 crores. So they do have a lot of inventory, and that inventory is gotten rid of, and we are certainly seeing signs of demand in a huge land parcel, wherein I think DLF certainly has a lot of land parcels, so they still have those prestigious assets. So I think there is a valuation comfort, and with promoter stake also increasing with the QIP, certainly I think next 2 to 3 years could be a lot better than the past 7-10 years. So I think DLF, because of the risk reward, this is the stock in real estate that we would like to recommend.
Interesting moves DLF for DLF as well, and watch out, they've deleveraged, as Parthiv said, quite significantly. Maybe the past may not be similar. Maybe the future may not be similar to what the recent past has been. And just before we get to market open, I want to mark the premium that quality is attracting. HDFC AMC yesterday closed at 1979. HDFC Bank 2450 or 2460, so again at fresh 52-week highs for itself. And Bajaj Finance northwards of 3600, 3625 or thereabouts. So yesterday was a day for all expensive quality names to only get a leg up, and just shows the kind of money that is flowing into some of these stocks. Devina, it's astounding that we keep on talking about how expensive they are and how they keep on attracting money.
Well, yeah, we'll watch out for all of that as we open up for trade. But pre-open, just a few seconds away, we're going to watch out for the currency, which strengthened in yesterday's session by a close of 69.15. Asia is looking strong. We've got about 1% move on almost all of the indices. The Nikkei 225, Shanghai has improved as well. And Hang Seng too. The SGX Nifty marginally higher, I think, has gained about 6 or 7 points from the last time that we took a check. But pre-open up on your screens, you've got a positive bias there at pre-open on the Nifty 50 as well as the Sensex. Individual stocks in yesterday's session, remember we saw steel contributing, banks contributing. Today's session, banks once again seem to be doing okay. And NTPC the last few days has been gaining good weight. And today's session also at pre-open at least is up closer to 1%. Grasim is up 1.5%. Indocin Bank does well, 1450 on the stock. Sun Pharma is up 1% as well. Vedanta, Hindalco, Hero MotoCorp, Kotak Mahindra Bank. These are some of the names there that are doing okay at pre-open. The flavor, or the color rather, is more green than red. HDFC Limited though is down in the red by about 3%. You've got UPL that's down 1.3%, HCL Tech. So IT is a pocket looking slightly sketchy in today's pre-open trade. Tech Mahindra is down about 0.7%. And a Z now is at 341. Currency, slight weakness from yesterday's close, 69.28 is where it's trading at.
The news yesterday, I think it came in one of the papers about Coca-Cola interested in Coffee Day. I think that was the news, and that's gotten the stock of Coffee Day pretty excited. Let's wait and watch. Looks like it'll start off 20% higher. Early days as yet, so let me not talk too much about it, but do watch out for that one, and do watch out for Reliance Infra, Reliance Capital, etc. Big days yesterday, and in today's session too look like starting off on a positive note. The last one is Jet Airways, last day for the company in the F&O segment. It'll be interesting to see what this one does in trade. The risk-averse investor or a normal sensible trader who doesn't have existing exposure could do well not to try and second guess what will happen to Jet Airways today, unless you are very informed. Just keep that at the back of your mind. But like we were talking about before pre-open, Parthiv, I can understand Bajaj Finance, HDFC Bank, no-brainers of sorts. Would you go out and buy HDFC AMC at these valuations? Or would you go for Reliance Nippon Asset Management, now no longer, or will no longer be an ADAG company any which ways?
Neeraj, on a very lighter note, I think I was just yesterday discussing with a client, and the client was very wise enough to tell me that Parthiv, had we in the last 15 years owned only the HDFC groups and the Bajaj group stocks, I think we would have had one of the most outperforming portfolios, even beating the index follow. So it's a very tough question that you asked me. As it is said that the cream always stays cream in terms of the valuations, but certainly I think we are now having some sort of fancy for Reliance Nippon, predominantly because now it's going to be a Japanese Nippon company, and Nippon is a globally huge giant, maybe even bigger in terms of overall size than the HDFC group. So I think in which case their experience of managing these trillions of dollars of assets could be humongously beneficial to the R&M shareholders, because I think they have had this pedigree globally, and they can certainly have this the energy to bring in a lot of global funds in the country. So I think the valuation is still huge to the tune of around 35%. It will certainly play a catch-up, but somebody holding Reliance AMC from lower levels, not suggesting an exit, but I can play for an AMC business certainly would be R&M.
All right, so Parthiv's call there is R&M now at 219. Try and get that audio fixed with Parthiv. But the other pocket to look at is going to be the oil marketing pack. Now, last quarter was not a bad quarter. They had good gains coming in from high inventory gains. The profitability improved. This time around, you may actually not see that happening because of the fact that crude oil prices saw a steep correction. However, these stocks have not done all that badly in terms of even the pricing action. Aditya, what would you do with an HPBP IOC?
So of the three, BPCL is the one which stands out for me clearly. At the moment, stock is facing resistance somewhere around 428 to about 430. It has corrected from those levels after hitting those levels of 428. I would wait for the stock to further correct to levels of 350, then probably go ahead and look at it, not at current levels. I believe the correction is not yet done with post that 428 mark. Somewhere close to about 350, yes, I will stick my neck out with BPCL. I would avoid HPCL at the moment. The chart pattern doesn't look too healthy. I believe there's more like to downward momentum rather than the upside. So close to about 210 is where I believe HP can correct to. So BPCL will be my pick.
Okay, that's some of the oil marketing names out there. Taking a look at Indocin Bank now, the stock's at about 1450. Remember, post its Q4 results, the stock saw a significant move on the upside. There were some concerns with regards to some accounts. They spoke about taking provisions, and the market seemed to be digesting that pretty okay. And therefore, the stock ahead of its results didn't do much, but post the results coming out and the clarification by the management, the stock actually started to move up. Sameet, what would you do with Indocin Bank at 1438? And then I get to Parthiv on his view on the fundamentals.
See, we are buyers in this particular stock around 1400, 1380. If you look at it from a slightly broader view, post this October-November fall, this stock managed to find support around its major support level of 1330, which was the November low, then which was followed by a similar kind of correction in the month of May, which halted around the similar kind of level 1350, and recently also last week we saw this stock rebounding from those important levels. So 1350, 1330 has been acting as a very strong support level, and on last 3 occasions we have seen buying emerging from that particular level. So we would be buyers until this stock remains above that important support level. So as a trader, I would keep a stop loss below 1330, and from here on I would expect a decent bounce back toward 1550, 1580.
Okay. Parthiv, your take on some of these private banks, in particular Indocin Bank?
See, in Indocin, the silver lining certainly, Devina, was the 2,600 crores infused by the promoters, and their intention was very clear with the equity stake dilution through the Bharat Financial merger. They wanted to recoup back that lost stake, and which is a very, very good, healthy sign. And 2,600 crores in the current scheme of things is very, very attractive for a bank like Indocin Bank. No two ways about it. This bank has had its challenges, and despite this capital infusion, we haven't seen this bank go back to its glory days of 1800, 2000 levels, and there's a reason behind it. Market is slightly wary that upcoming 2 quarters might, I think, reveal something probably which might not be very comfortable. So I think our strategy is clear for Indocin Bank. Wait for a couple of quarters. It's better to buy this bank at a 100 rupee premium from current market price rather than, I think, wait for something like an LFS again to be seen in the book. So I think wait for a couple of quarters of results. One will certainly get an entry point here.
Okay, maybe that's a sound advice on Indocin Bank too. It's been all over the place really. She did quite a bit in the recent past, went down all the way to 1365 before bouncing up in trade. As the pre-open rates are settling down, one quick check at the Nifty 100 suggests that the gainers or the losers are not really moving too much. Less than 1% for the top gainer, which is Bharat Electricals, and less than 1% for the top loser today, which is BPCL. So not much happening at the larger end of the spectrum. Maybe at the mid caps and the small cap space, there could be some movement here and there, but do watch out for the likes of ADAG and Jet Airways. They'll keep the screen buzzing in the session. Parthiv, before I thank you, this news flow which is keeping the coffee day stock excited, 8% up today. For somebody who has the stock, would you recommend staying put? Fundamentally, would you recommend staying put, or would you use this traction today to get out of the stock?
See, Neeraj, very frankly, I would use this news to get out of the stock because I think the promoter pedigree has other businesses which they have deleveraged, no two ways about it. They also have this real estate leasing business. And this buzz about Coca-Cola doing this acquisition, I think it's still in a very rumor-mongering stage. And they've had this past track record of buying Costa Coffee for $5.6 billion. So I would not be surprised if Coca-Cola really shows this intention. But whether this is the asset that they are eyeing is still a question mark. So I think this rally, I would still suggest an exit.
Okay, Parthiv, we'll leave it at that. Thanks much for taking the time out and being with us. Appreciate you taking the time out and being with us today. Coffee day up 8% though. Aditya, quick thoughts here on the charts?
I would clearly avoid the stock. If somebody is holding on to it, probably look for this up move that you're witnessing to exit from this stock. But nothing clearly on the charts to compel me to get into the stock, especially after this up move from 210 to about 241. I would not go ahead and buy the stock.
Okay, quick view on Z also, but before that, we're minutes away from market opening and we'll tell you all that you need to know to stay ahead in trade today. L&T has moved one step closer to complete its acquisition of IT firm Mindtree. L&T acquired a majority stake yesterday.
So Mindtree CEO Rosto Ravanan is likely to resign in the coming weeks, according to PTI sources.
HDFC Bank is said to be planning a 10,000 crore IPO of its NBFC arm HDB Financial Services. Bloomberg reports that it has appointed Bank of America and Morgan Stanley to manage the issue.
IndiaMart's IPO has been subscribed over 36 times, according to data on the exchanges. The issue was fully subscribed on Tuesday itself.
Lastly, True North Fund sells 7.4% stake in Aster DM Healthcare at 120 rupees per share. Ontario Pension, HDFC Mutual Fund and Fidelity are amongst the buyers. All right, just quickly, wanting to have a look at Z as well. The stock somewhere closer to 340. The last few days have been pretty volatile for the counter as well. I don't know what the market is picking up, and like you highlighted yesterday, Neeraj, it's about probably having something in hand by the end of June to make sure that you have a binding agreement by September. So whether or not market is getting a pulse on this is something that's keeping the stock a little bit more active. But Parthiv, all right, I'm sorry. Let me just go to Sameet for his views on the charts for Z and where exactly are the levels that we're going to be watching out for.
See, clearly after recent correction, this stock has slipped into a consolidation mode. On the high side, 360, 358, these are the levels to watch out for. And on the low side, 320 has become a very strong support. So the overall range has narrowed down. And if you have to take any directional bet, I would rather wait for a breakout to happen in either direction. So on the higher side, 360 and low side, 320.
Okay, watch out for Z. Watch out for Dish as well, along with typically when Z moves, Dish tends to move as well. And after the crack from 356 all the way to 336, Z's bounced back a bit. I don't know what Dish will do that or no, but it remains an interesting stock to monitor. At the end of the pre-open session, Adani Transmission looks like starting off lower. But the one stock that I wanted to check, Sameet, with you is Allahabad Bank. After a big sharp up move yesterday, starts off slightly lower today because PSU banks are the fancy in the last couple of days. Any thoughts on this one? And if not Allahabad, any other PSU bank?
See, mostly if you see, Neeraj, in last couple of days, this small size mid-cap, PSU banks were on a roll. If you look at the overall movement in Syndicate Bank, Allahabad Bank, we saw a massive surge. And, after a couple of days of strong move, we would see some kind of, profit booking or a consolidation. So this is just a part of that. But within this space, at this juncture, if you have to pick any particular stock, obviously the first preference would be SBI, but with a trading view, we would certainly go with Bank of Baroda, which was consolidating around its major support lows of 115, 117, and yesterday we saw first sign of strong up move. So we would expect Bank of Baroda to head towards 128, 130 over the next few days.
Anything, Aditya, that you would do with any of the ADAG group stocks?
No, completely avoid it.
Totally.
I don't want to get into ADAG pack. Most of them are getting out of the FNO space today, so there will be volatility for sure. You could see a lot of short covering rallies towards the end of it because you have to close out all your positions. Alternatively, you can see people are holding longs. You can see a lot of correction in some of the names. So it will be all over the place. So for that reason, I'll completely avoid it, not get into that space at all.
Okay, I'll leave that out, and I'm guessing that the same would hold true for Jet Airways as well. Just one quick thought, Sameet, Kotak Mahindra Bank at 1500, is there a trade here?
See, this stock is consolidating, and if I have to see any particular level in the upward direction that would trigger some kind of rally in this particular counter, then I would certainly look for a move beyond 1517, 1520. So if the stock manages to surpass 1520, then yes, it would trigger an immediate up move, and in that case, stock can head towards 1540, 1550.
Okay. Just under a minute left to go for market opening. So let's quickly get in those top technical ideas. Aditya, let's start off with you first.
I'll go in for L&T. Stock is looking extremely bullish on the charts. Targets 1640, put a stop somewhere around 1490, and the stock is poised to make higher highs and new all-time high.
Okay. What about you, Sameet?
I'll go with Tata Steel. Metal index is gearing up for strong move. So Tata Steel can be bought for a target of 532. Stop loss at 496.
Okay, Chavan, stay on. We'll take in opening thoughts from you post-market open. This might be an interesting start because it doesn't look too strong, but it could well be similar. The day could well be similar if our experts are to be believed to yesterday's session. We started off flat and then during the course of the day built up. It's been the story for the last two sessions at least. Let's see if today is an encore. Very important expiry day, so important to monitor the prices. But the start, flat in the session, no surprise. The start to the session is very, very flat. Nifty, Sensex, Nifty Bank, all of them hardly any moves. 0.16, 0.17, the Nifty Bank, just 0.1%. So not big moves coming in for any of the key benchmark indices. The mid caps and the small cap indexes should also come up on your screen. 34 points up, so 0.2% up for the mid cap space, the small cap space to lying absolutely dormant. So hardly any move, but it's the bit of green, which is a good sign. The heat map should have a lot of green, and it does. More gainers than losers on the Nifty 50. The top loser is Coal India, which is down 0.5%. UPL down about 0.5%. Tech Mahindra down about 0.33%. But not too many losers. Even IT as a pack is not falling. Reliance, though, is soft, about 0.2% lower. But again, very tempered losses. What about gains? Again, tempered. Morgan Stanley came out with a note on Bharti Infra. As a result of that, that stock is up 1.5%. I can see no other reason for this stock to do what it is doing today. Otherwise, aside of that, Morgan Stanley is bullish. They've upped the target price. They've given a target price higher than the current market price, and therefore that stock is active. NTPC up 1%. Indiabulls Housing and Z are up about 1% apiece, and there's some strength in Indocin Bank. But aside of that, not too many big movers on the index. Let me try and highlight a couple of names from the broader of the spectrum before I hand it over to Devina for what's happening across that entire space. So lots of stocks. Quality was at a big premium yesterday. Let's see what those are doing. So all of them were near fresh highs. HDFC Bank, though starting off very flat. HDFC AMC up 1%, nearing the 2000 mark for HDFC AMC. And Bajaj Finance nearing the 3650 mark. They're quite remarkable, the moves that we're seeing in some of these. Again, stocks which are very active in trade yesterday include an Allahabad Bank, which is starting off lower today though. At 48, it's down about 1.25%. Igarshi Motors, 2 straight days of gains, and today up another 1.2% at 266. And Dhanuka Agri, who spoke to us earlier, 8% higher in trade yesterday, up under 2% at 417. Devina, what are you spotting?
Well, starting off with Coffee Day, the stock's active and it's carrying forward its gains from pre-open. The stock's up about 5.8% on Coca-Cola, news of Coca-Cola having some interest there. Reliance Infra, and look at the ADA group stocks. Reliance Infrastructure is up about 5.5%. Should pull up the rest. Reliance Power 2 is doing okay for itself. Reliance Naval, that is up to about 3.5%. So the entire pack is active. 1% beverages, that moves up. Remember, the stock had taken a huge knock, when there were the arrests made at the company, the top brass being arrested there. Then you've got the likes of Gati, which has moved up 4.5%. Then Eveready has moved up. Bajaj Hindustan from the sugar space is doing okay. TB18, Sri Lanka Sugar, Indiabulls Real Estate. A lot of these names buzzing about in trade right now. You've got more stocks advancing than declines, but just to highlight a few of the losers, Eros International, I think last 7 days the stock's lost about 30%. So this is not a good going. It's not a good phase right now for Eros at least. Cox & Kings too has seen some really bad days. The stocks is down 32% over the last 7 days, and today's session 2 takes a beating. Mindtree is down about 2.5%, and Imami now, after taking that 2-day break from its losing streak, is back down by about 1.4%.
Well, so some movers in the session. Indiabulls Housing Finance and Bharti Infratel start off higher in trade. 274, 1.29% higher. A bit of a bounce in Bharti Infratel. Watch out for that one. Opening thoughts from our experts before we talk about some other stocks as well. Sameet, to you first. About 0.25% for the Nifty Bank after the 1% up move yesterday. What do you make of Open? Is there a trade that one can initiate on the Nifty Bank now?
See, clearly the Open is in line with what HGX Nifty was indicating. So the overall bias remains bullish. Yes, Bank Nifty certainly looks good if we look at the initial trades in some of the banking names like SBI, ICICI Bank and Axis Bank. They are clearly indicating that we are likely to see good moves in some of the banking names. So Bank Nifty from here on, we won't be surprised to see it heading towards 31,500 today itself. So we would be buyer in case of minor dip in Bank Nifty, probably 30-40 points from current level. It would make a attractive risk to reward ratio. So go long on any minor dip, keeping a stop loss somewhere around 31,100. Initial target would be around 31,500. But overall, if you have to take any another 2 to 3 days price move, we would expect Bank Nifty heading towards 31,700, 31,800.
What's happening here on Cox and Kings and EROS, Aditya? I mean, today it's down 7%, Cox and Kings, EROS is down 5%, but the last 7 days has been brutal.
So that's been the story for both the stocks throughout the year. Cox and Kings is down about 75% year to date. So that tells you that there's immense selling pressure in the stock, and I believe that will continue on the downside. Stock can hit levels of 35, 36. So there's no respite as far as Cox and Kings is concerned, and same is the story with Eros Media as well. It's continuously getting locked on the lower circuit. You can't even exit that stock if somebody's holding on to it. So the moment it gives you a minor pop, it comes out of that lower circuit. My only recommendation is to get out of these stocks. Don't look at these stocks at all because they've been just falling one way from the cliff. On the contrary, go in with names, frontline names, which are giving you higher returns and which is continuously making higher tops, higher bottoms. So that is the trending stock I want to be in, not in these stocks.
Okay, and the other two stocks, Graphite India and HEG, these are the other two names. They too are pretty famous for one-way moves. Once they start moving up, they just keep moving up, and once they start moving down, there's no bottom. But now you're seeing these two stocks picking up pace. Sameet, Chavan, on any of these two names?
No, I mean, we would certainly avoid, as far as graphite is concerned, this has been one of the laggards in last many months now. It is consolidating. There is no, participation if we look at the overall volume activity in cash segment. So I would certainly avoid such kind of laggards.
Okay. Well, maybe playing safe. They might not be trending stocks. Aditya, I don't know if you have a different view here. Are you taking a bite on either of these two names?
So Graphite, I would completely agree with him. There's no sense in taking a bite in Graphite. HEG, probably yes. I'll place a very strict stop loss at the previous week's low, which was around 1,200 odd level. 1,200 odd levels, and go long for a short covering rally purely to levels of 1,800 to about 1,900. That will be my upside target. But a strict stop loss on the downside will be 1,200, which is previous week's low.
Okay, some other stocks just before we wrap up this segment. The markets, by the way, are now building on. So about 1/3% for the Nifty Bank, about 1/4% for the Sensex and the Nifty. So the start is brisk. 3 days on a trot now. We've had green on the screen. The big gainer today is something that Devina was speaking about. Indocin Bank, 1458, up about 1.5%. That's the top gainer on the Nifty. And then it's followed by Bharti Infratel and Indiabulls Housing Finance. That one has done well for itself in the session today. Also making a good start today is Axis Bank. So do watch out. Banks certainly seem to be doing okay. And Maruti Suzuki at 6527 has also recouped some of the losses. We don't have too many losers. That's the key thing in the session. Now I can understand Indiabulls Housing Finance as being a slightly difficult one to tell. But Sameet, how about Axis Bank and a Maruti Suzuki? Two rate sensitives, both of them making a bit of a pullback. Any of them worth a trade?
We are a bit on both the stocks, and as I've mentioned about Bank Nifty, we are seeing good surge in most of the banking counters, ICICI Bank, SBI and Axis Bank also. So in last 3 days, stock has managed to give a V-shaped recovery from its important lows, and from here on, stock is poised for again retesting those highs of 820, 825. So Axis Bank remains to be a strong candidate within the private banking name. So minor dip around 790 would make it a good risk reward ratio for momentum traders, and the lower side 780 would act as a very strong support. So we would be buyer in Axis Bank, target 820, and Maruti is the one stock that we have been closely tracking, not from momentum traders but those who are willing to keep it for another 5 to 6 months. Stock is in a process of building a base around its multi-year lows of 6400. So as a medium-term trader, I would certainly accumulate this stock in a staggered manner around this zone of 6400 to 6600.
Okay, that's Maruti there. 6530 had gone down to I think 6450 or just about those levels, and that's the usual support that it takes, and then it bounces back from those levels. And Eicher Motors too, since we're talking about autos as a pocket, and TVS Motors in and around those 52-week lows, Aditya, is there a case for a bounce?
So TVS Motors, I believe there's more correction on the downside. Eicher Motors on the other side can find some support in the vicinity of about 18,500 to about 18,600. At levels of 19,300, I can start accumulating the stock, but clearly there's no momentum up move yet in the stock. So it's more of a buy at current levels and wait for the stock to claw back to levels of about 18,500. Then you can add more. So it's more of a start adding on to Eicher Motors at current levels, and then probably down the line, 5 months down the line, you can see levels of 22,000, northward levels of 22,000 in Eicher Motors. But yet there's no upward momentum which will tell me that immediate spike we can see in Eicher Motors or TVS Motors. I see more downside from current levels. So for that matter, Eicher Motors probably, yeah.
Okay. Chavan, Aditya as well as Sameet, thanks so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time. Just before we wrap, keep in mind Donald Trump at about 9:17 a.m. has put out this tweet that he looks forward to speaking with Prime Minister Modi about the fact that India, for years having put very high tariffs against the United States, just recently increased their tariffs further. This is unacceptable and the tariffs must be withdrawn. So he's at it again. I'm reminded of that song, The Heat Is On, Devina. Let's wait and watch what happens. From an Indian perspective, it's not just Trump and Xi Jinping, but Trump and Modi, which is important too. Yesterday's conference between Mr. Jaishankar and Mark Pompeo didn't suggest anything to this effect. But then, who can predict Donald Trump?
Yep, predict the unpredictable, not possible with Donald Trump. But coming up, we will discuss higher gold prices as they act as a tailwind for gold loan disbursements. We speak to George Alexander Muthoot of Muthoot Finance and ask MS Unnikrishnan of Thermax what he expects from Budget 2019 and the impact on his order book.